All right. Good morning, everybody. It's Friday. We made it. All right. So ISM, PMI, and the rig count. I really don't think the rig count will have impact, even with everything that's going on with the energy news and energy markets. But that doesn't mean we can't at least anticipate a little bit of news coming out at that time. I wouldn't back away from anything. Certainly wouldn't close any of my trades down for that rig count. But just kind of recognizing that that there is some econ there. We do have a European central banker scheduled to talk at 1 o'clock. That's really all we got. Short list. All right, we're out on the daily chart. Just kind of taking a look around, seeing where we're finishing up the week. We don't have the higher low yet. I had someone asking me about this yesterday. We can't validate that as a higher low until price has already moved away from it and gives us that pivot, right? But we do have that lower high. So in that context, we're just waiting to see how this resolves. Today we could continue to move lower. We could kind of just base through the day and or try to reclaim these previous levels around 39.5, 39.7. If we were to start coming back up and say we break Wednesday's high, then I believe we could validate that as a higher low. But until then, not yet. We already have next week's box. It's not locked in, of course, because it's going to move all day long. But it's still something that we can kind of look at and get a gauge for what the market believes we're going to be looking at for volatility next week. Kind of how are the market makers doing? And so far, I would say that they're pricing in quite a bit of volatility. Now, that might not look like very much compared to where it was, in the week that we just have. But next week's a holiday week. It's a short week. So the box is bigger, but there's less days. And that implies that there very likely is quite a bit more volatility being reflected next week. A little bit of context, right? Three things the market can do: game it out. One scenario for today is that we just maintain this range. It absolutely is on the table, right? From 38.25 down to 37.40. Every bit of that, if we just maintain that range, that is a very likely scenario. On the other side of that, half the ADR is outside of yesterday's range. So if we break out to the upside, then 38.31 would be half the ADR target. Beyond that, I would focus on the RTH of Wednesday, 38.40. Even to get to 38.40, we're very likely to see some kind of response out of the market out of Wednesday's low as well, 38.01 or 3800. And then there is a COG line at 38.11, which also lines up with the Globex low between Tuesday and Wednesday. And the RTH high from Thursday. Now it's the RTH high and the Globex high are pretty close together. You may just want one over the other. But as you can see, marking it up, we've got plenty of pivot points, markers, signposts, goals, targets, whatever you want to call them. A full ADR is 38.81, and that would pretty much get us back in line with Monday and Tuesday, or at least the lows, the bottom side of Mondays and Tuesday. And then the third scenario is that we continue this move to the downside. To get there, we would look for a break below the Globex low, 37.61. That's Thursday's Globex low. Then breaking through our own Globex low, and then the low of yesterday, which is around 37.41, looks like. Yeah, 37.41. Below that, half the ADR, 37.31, and then 36.82. All right, so looking at what we have here, we're on a 10-day, 30-minute chart. We've got a very wide volume profile, and we are right now at the point of control. So if we break below, call it 37.70, we're really going to start to get away from the last bit of volume support that would come with being near that point of control. And we start to get into a pretty significant air pocket. You can see that there's a large shallow area with no volume in it. A volume, it's not like it's not a support like a handrail that you would want to lean on, right? We don't give it a lot of trust or validity. We would still mark out our regular pivots. And we just recognize that if price is moving in a particular direction and there happens to be a large amount of volume bars there, then it's very likely we're going to see a market struggle to get through that zone or that area. From the top of the box, we expect to go to the bottom of the box, and from the bottom, we expect to go to the top. Well, we're not at the top or the bottom. We're in the upper area of the box, but the argument the argument could be made that we came from the top of the box and that we are still working our way down towards the bottom of the box. Just keep in mind that the way that this volume profile works and what it's reading, these candles all the way to the left are going to slowly drop off as new candles are printed on the right. We can still carry the point of control from Wednesday's session, although there could be an argument that those prints from yesterday hit it and that it's no longer an untouched point of control. We did actually make it all the way through, but it was a wick, not a candle close. So it does leave the discussion open that that is still an untouched point of control, considering we didn't close on the other side of it. But close with what, right? And that's always been the argument. Did we close, say, on a 200 tick chart? I'm sure we did, right? But what about a 1 minute or a 5 minute or a 15 minute? So then the argument becomes a little more arbitrary. Could just stick to the logic of have we hit it or have we not hit it? And then, of course, there's a logic behind why we care if it hit it at all. It's because we're looking for either old volume or we're looking for resting orders, new liquidity. So the line in the sand and thinking about whether it tagged it or didn't tag it or closed on the other side of it, it's a bit moot. The end of it all really just comes down to, is there still liquidity there? So someday, eventually, when we get back up into that area and test it, we'll have that answer when we see it on the dome. Probably be a good idea to continue to carry it forward until it is completely resolved, because it doesn't hurt to have it on there, and it would be a good heads up knowing where it is rather than just dismissing it and then later on wondering, hey, what did we hit? Like yesterday, what did we hit? It's a question I used to ask quite a bit. I was looking at the dollar futures and we were just getting back above the 105. Had a nice cup. We may or may not get a handle. All right. The S&P and the NASDAQ are back above their midnight VWAP. Same thing with the Russell, although all three look like they're about to give it a good bounce test. Bitcoin had a crazy exaggerated move last night and then gave it all back. Now we're holding below the VWAP, but we're still holding above the lowest of the Globex last night. Bonds, again, we were just looking at that higher time frame. The bonds inside day breakout again. They did that earlier, sold it off, and then now we're making another run at it. And the dollar, nice exaggerated move this morning, starting to wake up. It's back above that 105, and the 105 has been our benchmark. As long as the dollar is holding and maintaining below that 105, we've considered that there's not a lot of pressure on the NASDAQ and the S&P. It's not the idea that if the dollar goes down, that the ES and the NASDAQ would go up. That's not the logic. It's the idea that when the dollar, in the current market conditions, if the dollar maintains below 105, then it's not putting pressure on the market. Once we get it above 105, we've continued to see that pressure. It's a negative pressure against the market, and we are back above that 105 now. Right. I will note that the VIX is not responding like the dollar this morning, so they are not coupled yet at this point. Want to continue to keep your eye on the VIX, see if it's going to actually wake up and start responding to the price action that we've been seeing around us this morning. The oil market, exaggerated move off of that low, and right now the algos are still firing into it. A consistent, persistent channel pattern like that. The cyan line that you see there, the 109, is a moving average from the daily time frame. It's a 4-period moving average. Consider it like a surge indicator. When we get above the 4-period moving average, and then we're looking at a market surging, not trending, not momentum. It's just like a bit of a surge. It's not there yet, but coming up into it, definitely. The orange line here on the NASDAQ, that's where we opened in the Globex. Seems to be the rejection point. We're hovering around this zone between where we opened and the VWAP, right? Just kind of maintaining this tightening range. So we're looking for a resolution today. We have not yet seen capitulation. We haven't seen the hand wringing and the real fear and the real extremes. These downward moves that we've been looking at, while they're a little rowdy, they're definitely not extreme. We haven't got to that level yet. And the main question right now is, are we going to get any sort of swing high first, a little bit of a bear market rally, a pullback off of the lows before we continue the move to the downside? Consider the idea of how far have we gone. Call it distance from moving averages. If I built this indicator for, if you consider something like a 10-period moving average as the center of the basketball court, when we get too far away from that 10, a market seems to pause, consolidate, or turn around and go back towards the moving average. It's what it does. Every market treats that distance differently, right? So, for an example, say Tesla might have a history of moving 8% away from the 10, whereas something like X Steel might have a history of moving 3% away from the 10 on average. So once we realize that we can gauge and measure this number, we can get an idea, have we moved too far too fast, which has always seemed very arbitrary. Too far, what's too far on what time frame? So here we're looking at how far away we are from the 10-week moving average, and historically, where's our turnaround point? Well, the extreme is around 9%, and we're sitting at about 5%. And 5% really seems to be about the average, right, for that turnaround time. But this is a weekly time frame, and we're more interested at this point in a daily time frame. So we want to be able to answer that same question. How far away from the 10 are we? We're barely away from it at all. And the average, say over the last year and a half, has been around 3.5, possibly 4 for a bit of an extreme before we start to turn around and go back the other direction. We're not even 2% away from that 10. So we haven't gone very far, and we haven't gone very fast. This hasn't been a very extreme move. It's the old phrase, buckle up, here it comes. Yeah, well, we certainly have the capacity for it, right? We have not yet reached those extremes. Always nice to have a little bit of context. So it probably won't be much of a surprise that everything is down this morning, right? I'm sure we can handicap one or two markets, say like natural gas is up a little bit, USO, marijuana sector, and one of the energy names, maybe two. We've got XOP too. All right, so two energy names, and the Bitcoin ETF. Everything else is either flat or negative. Gold down more than 1%, emerging markets 1%, technology, the Qs, IWM, and SPY. Uh, the financials seem to be doing better this morning than technology, but not by very much. Looking at the EV markets this morning, XPEV is basically leader of the pack, inside day breakout already. If you're looking for a play in this, the idea would be for continuation. It should not get below the open of yesterday. We're talking 2190. I guess you could call it 22. I mean, it's close enough. That would still be the line worth marking, right? This is so far a nice red to green setup. I like to run my red to green setups this way, where you focus on having a trending market, and then a little bit of a pullback. And there's your red day. And then the red to green follow through would be that we rally up in the pre market at least as high as the previous day, maybe even break through the top of it. And there's some method to that madness. The idea is that if we are entirely outside of yesterday's range as we come into the open, and then we start to fade back a little bit, that those institutional pivot points provide support, and we get a little bit of a Busby before a continuation in the move. These red to green plays very often turn into, a 3 or a 4% move. So they're absolutely worth focusing on. It's not much of a trend off of the lows, right? We're talking about having a trending market, but we have been setting those higher highs and the higher lows. So with this potential red to green setup, getting a nice little swing back up to say 36 or 36 plus, it would be a swing trade, right? We're not talking about going that far in a single day. We got a 21-day ADR of 5.1. And although I turned the lines off, we can still just use the drawing tool, kind of figure out from where we closed yesterday to a 5% move. Looking at about 33 and a quarter. And then I would say add the market maker move to that, which is another 3%, which would give us an 8% move on the day. And that's at around 34 and a quarter. So at least we would know what calls to target. Or if you wanted to, maybe put on a swing trade with an iron condor, skewing it to the upside using something like a 35, 34 call spread and a 31, 30 put spread, something like that. Sell a put spread to finance calls, buy a bunch of calls to run them up. A lot of different ways to run that thing. Either way, it's a nice red to green after this bottoming formation from the last two quarters. Keep in mind with your swing that there's some significant resistance at $40. And this whole thing pretty much is the cup. And we're trying to figure out if there's going to be a handle or not. NIO also up this morning, 2%. It's going to be the same argument, though, whether it can keep it or not. We didn't have a red day yesterday because it happened to rally back up off of the lows enough to give us a hammer. Um, nice recovery. So the idea is we want to see that follow through today, right? We've got an IX10 pattern. So we're not just inside day, we're IX10, be a nice breakout above 22.30. And aiming for $24 is not out of line when it comes to a market like NIO. And then we've got Li Auto up 1%. Although, I mean, it's giving it back. If we stay negative this morning, or if we start to get more negative this morning, these EV markets that are up 2 and 3 and 4%, they're going to be the ones that are first on my list to play whack-a-mole to the downside. All right, a lot of the chip names are in this crypto watch list. And when we're looking at the crypto watch list to see what's up or what's down this morning, it really stands out how much those chip names are not yet participating. So maybe want to keep our eye on those, see if we're going to get any kind of turnaround there. We did have some earnings impact, right? MU kind of bled into other chip names. And then there was a downgrade in the chip sector yesterday, or maybe it was the day before yesterday. It's all starting to blur together a little bit. But there's still a lot of blood in the water when it comes to the chip names and a lot of room to the downside left to go. And the pot stocks are up this morning. Some of them really nice. Good moves to the upside. XXII is a real estate company, but it's a real estate company that focuses on helping marijuana companies find real estate, right? So it fits into that category, anyways. Tilray, Cron, CGC. Although CGC isn't up enough for us to consider it up, right? It needs to be at least a 0.5%. But again, when we're thinking about a highly correlated market state, if 8 out of 10 names are doing what the S&P is doing, then a sector like the pot industry is a good one to focus on to perhaps find something with a low beta, something that doesn't move in the same way that the indexes do. It is my day to stream, so I'll be in it around 9 or so. And this afternoon, I will also be streaming because we're going to be doing another option Omega back test. I'm not quite sure what direction we're going to go. There's still a lot to discuss when it comes to the weekly iron condor, mainly because the SPX now has 5 expirations a week, which means we could have, a weekly iron condor with an expiration every single day if that's what we wanted. But would it be viable? Is it a good thing to focus on? Well, I mean, we can use the back test to answer that kind of question, right? And then we really did use a small data set. We really focused on just this year's data, and an argument could be made that since we are using such a wide iron anyways, that it should work even in previous years. But we don't have to assume that it would work in previous years when we can just go in and run the back test and find out. Now, the other day I did say that I was going to be putting on an iron condor today. But when I said that, I misspoke. I had temporarily forgotten that next week is a short week. and I don't want to put on mechanical trades when there's a short week. So I won't be doing one today. That's the way it is, right? Monday is the 4th of July. And I think that'd be a Captain Obvious statement for everybody else here in America. But, we got a lot of people from around the world and they don't know our holidays as well as we do. Makes sense. I don't know their holidays. All right. So that's what I got. Everybody, I will see you in the live stream around 9-ish, 9:15. We'll get started and take a look at our day. The afternoon stream will be starting at around 1 o'clock Eastern, and it will be recorded if you miss it, of course. I'll see y'all there.